Hi everyone, and welcome to this morning's Forex webinar. Good to have so many of you join us here today. I can see we've got some of our students, Forex program students, we've got some of our quantum users, and I think we've got some new people as well. So whichever category you fall into, you are very welcome. But before we start, as usual, may I just draw your attention to the disclaimer that I know you can see on your screen. As you know, trading can be a very tricky, risky and tricky business. So please don't ever think of using money that you cannot afford to lose. Right, so very quickly, for the benefit of those who are coming along for the first time, what we're going to do is we're obviously going to look at the chart, see what's happening in the Forex market, and we look at the Forex market from a technical perspective using volume price analysis. It's a methodology that looks at price action and also volume. Basically what we're looking for is we're looking for confirmation that the move that we are seeing on the charts is genuine, and if it's not genuine, it's therefore an anomaly and it could be a trap. And this is what the methodology does for you, but it also helps you helps us to anticipate where perhaps the market is going next, because as part of the VPA, it is price action and volume, but it's also support and resistance, it's candles, candle patterns, and time. Time is really important, but best way to explain the method is actually to look at some charts. But with the Forex market, once you get a grip on the technical analysis side, you really then have to look beyond that. You have to look at what's happening on the fundamental landscape. But we also take that one step further in our approach, and the approach that we have taught to our students as we look at what's happening beyond the Forex market into the related markets, because all the four capital markets have relationships, correlations. One will, in a move in one will be reflected in another, and sometimes a move in one can also anticipate what is going to happen in another, and that is certainly the case with the Forex market as well. And what we've also done, you heard me mention that we have some of our software users here, our quantum trading users, and we have developed some very specific indicators to help us, if you like, deconstruct this market, because it's the only market where you are actually trading one currency pair against another. You're kind of looking at one economy against another, and the way we approach this is we kind of break it down into the individual flows, into individual currencies, and then we put them back together again and see, well, where are the strongest moves? If I'm a trader that likes to focus on certain pairs, what is my pair doing? What is my currency doing in any particular time frame? And you'll see us use these indicators as we move through the webinar. And of course, David is sitting behind me. He has got his charts. He's got the Ninja Trader platform. I have MT5, the MT5 platform, which I have here. The MT5, I use MT5 primarily because it has a greater number of time frames, as you can see here over on the left-hand side. It's very similar to MT4. A lot of the functionality is the same. This has got a few little sort of extra bits and pieces. One of the nice functions of MT5, in case you've not considered using it, is it has what's called a docking system, where basically you hit the docked function, and what it does, you can move the charts out of the profile onto another screen on your onto another screen, which makes life an awful lot easier. Right, this is where we always start. This is certainly where I start. Our users start, is we like to see what has gone on before with regard to flows into the individual currencies. The currency at the moment, which is we all pay huge attention to, is the Japanese yen, because of what is the sentiment that is going on in the broader markets. In other words, is the market willing to accept more risk, or is the market in thinking of more safe havens? And the Japanese yen reflects that sentiment. It can reflect both sides of that sentiment, whether if it's being bought, we know the market is more nervous, and if it's being sold, we know the market is in a positive and a good move. Now, with regard to market sentiment at the moment, you will have read all sorts of things about this is the market market generally, and I'm talking, when people talk about the markets, they tend to refer to what is happening in the US markets, and in particular with the indices, with the futures, and everyone gets a sense of whether is it risk on or risk off. So we go off to investing.com and we look at what's happening with the S&P futures and the Nasdaq. I haven't got the Dow Jones futures here. And basically the market has been quite fixated on the Nasdaq. Why? Because the Nasdaq is, powering higher, powering into all-time highs. It kind of feels like 2000, the year, the dot-com boom at the moment. It's got that feeling about it. S&P, the Dow, in its trailing in its wake, still going higher. And how that was reflected yesterday when the market was, oh, the Nasdaq, it's going higher. Oh my goodness, can it go any higher? What's happening, etc., etc. There's a lot of euphoria around this one index, but actually underneath it, things really quite unstable because of the virus, because fundamental data, fundamental news is dreadful. The most important item of fundamental news we've got this morning is we have these numbers. We're just waiting for the flash PMI numbers for Europe. So obviously, if you're trading euro at the moment, see what's been happening. The euro is actually being bought overnight. We can see here that the euro has been moving higher. I just isolate it out, and the euro kind of reflects the kind of mood we had yesterday. This is the hourly chart. Everything was going higher yesterday because, the Nasdaq was going high. It was pulling everything up. The sentiment was fantastic. But if you were actually on the charts, as I was on the pound yen yesterday, it got there. But oh boy, it was frustrating. Price action kept stalling at a significant support level, resistance levels. It would pause. It got there in the end, but it wasn't it was by no means a smooth ride. And this is what the CSI also picks up. So, as we can see here, what time was this? This is pullback. This was actually by the time the evening came, which is about, we have to take 2 hours off. That's about 5 o'clock. It rolled over, then it went up again. And this was very pronounced on the faster time frames, which is where I was yesterday on the pound yen. I do accept the pound yen is not the easiest pair to trade for all sorts of reasons. It does attract the attention of the algos. But when it moves, it can deliver some fantastic trades. I've got the charts to show you later on what I mean by this kind of stuttering, and it can be very frustrating. It was, markets were happy to take on risk yesterday. That was reflected in, strong buying of the Aussie and the New Zealand, but it wasn't a smooth ride, and it kind of reflects what the market is at the moment. Desperately want to be positive, but there's this sense that at any moment something could happen. That is reflected in the forex market. We just have to, as traders, what we have to do is simply trade what we see on the screen. And going back to the euro, what have we got here? I've isolated the euro pairs. The way we've designed these indicators, you have the individual flows, which is reflected in the lines, as we can see here, and then we have what we call the matrix, which takes those individual currencies and gives us a snapshot into which is the strongest, which are the weakest, where's the most selling, where's the most buying, not only amongst the 28 pairs, but you can isolate the individual currencies. So you can see here we've got the euro yen primarily reflecting that sentiment is positive, the Nasdaq's going up, the S&P is going up, but really the numbers also reflect that yes, they are generally going higher, but not by a huge, not in leaps and bounds, because we have this important data that's coming up in the next sort of half an hour ago. From a trading perspective, what do you do when you have an important piece of news that's coming up? And do you take a trade? Do you wait? And there really isn't any definitive answer to this. First of all, it depends on the time frame that you are trading. If you're scalping and you're going in and out numerous times, then possibly you could say, well, okay, well, I'm going to go in and, you know, coming up to the news, then I'm going to wait because the fundamental news, you know, it will have an impact. So you could close out all your positions. If you're in a slightly longer trade, in other words, you anticipate being in for perhaps for most of the day, you've got in at a particular point on the chart. That's up to you. Do you want to, you know, just maybe if you have multiple contracts, if you're in profit, take some off and maybe leave one to run and say, look, hey, whatever happens, happens. You could get, you know, the news could go in your favor and, you know, the contract would, you know, deliver yet more profits, or you get stopped out. Does it really matter because you've actually taken some of your profit? And then it comes down to you know, to levels. Where is the pair that you're trading at this particular moment? This is eurodollar. Everyone's going to be watching eurodollar. Here I've got it on with the Camarilla levels to tell me which are the key levels. I'll just put the dollar up. Euro, here we are. And the reason I've done this is isolated the two currencies on this chart is because it's just easier to see what they are doing. And it's a great example here. If you look over, this is the 10-minute chart, but this is very typical of what we saw yesterday. Lots and lots and lots of consolidation, moving sideways, these lines going up and down, up and down. There was a nice move in the dollar. The dollar was actually being sold off, you know, quite strongly, but not necessarily against the euro. I think it's been against cable and the Aussie as well. Then these are the levels. This is the Camarilla levels. Where are we at the moment? Well, we're on the R1, on the hourly. Where are we? We're at a very important level on the hourly chart. The difference between the levels on these time frames is that the levels up to but not including the hour are recalculated on a 24-hour basis. What the hourly levels give us are levels that are in play for the rest of the week. And that's actually quite important because I wrote a post on my forex trading page on Facebook where I sort of took a quick look at the euro dollar to highlight to the traders there that this important piece of news was coming up today, and it was trading just, I think, in the middle of between the R3 and R4. And I actually said, you know, beware, tomorrow we've got this important piece of news. Where's this likely to be heading to? It's going to be heading to the R4, and in fact it's actually stopped dead on the R4 and it's moving sideways. Why is it moving sideways? Because the lines are moving sideways as well. And this is typical what we had yesterday. You know, we'd have a nice move higher, capture a bit of that move, then it would pause at one of these levels, move sideways, indecision, can't decide whether to go higher, can't decide whether to reverse, very much reflecting the mood, if you like, in the broader market. While everyone has been, you know, talking about the NASDAQ, fantastic, it's moving higher. Apparently a lot of retail investors are piling into the markets now at these very elevated levels. And underneath it all, there is this sense of fragility in the markets, and that fragility that is there is down to the uncertainty about whether the issue with the virus, you know, is it going to go away? You know, what is the state of the economies? You know, what is the impact on those economies? And nothing is really, you know, coming out, but it's going to come out certainly in the PMI data this morning with the euro, and the data that's going to come out in the next weeks and months. So really, and all reflected in the forex market. So I'm actually going to keep an eye on the euro, as I said, because of what's happening on the with the fundamental news. I'm going to pass over to David because we've just come into the London Open, and I think you've had cable up, haven't you, David? Right. And by the way, if you have any questions, just drop them into the chat box. More than happy to answer them on air or in the chat.